Welcome back to First Trade's on ET Now, and let's put the spotlight on Happiest Minds. This time, the company did come out with a decent set of earnings, but what's the way forward? Let's understand from the management itself. Mr. Venkatraman Narayanan, who is the MD and CFO, is joining us, along with Joseph and Venkatraman, who is the Executive Vice Chairman and CEO. Very good morning, gentlemen, and thank you so much for your time. Mr. Venkatraman, I would like to come to you first to have your take on the earnings, because this time, on a sequential basis, your revenue has seen a jump of almost 2%. Help us understand that what factors contributed to the performance this time around, and going ahead, what to expect from Q4? Are we in to expect a better growth number on a sequential basis?
So if you look at the financial performance for this quarter, I will touch upon revenue growth and also margins at the same time. QOQ, we have shown 1.8%. Year over year, we have shown a 30% growth, almost 29.5% growth. This is in rupee. Whereas in dollar, we have grown by about a percentage quarter over quarter, and year over year about 28%. When it comes to margins, which is EBITDA, we have grown year over year by about 11%, and we are at about 21.1% for the year. And operating margin also has grown by 12.5%. Year over a quarter, this quarter over the previous quarter, the same quarter last year. So if you look at it, all our revenue and profitability metrics have shown a growth. This is despite the fact that Q3 tends to be a seasonally weak quarter for the industry, and we are also facing some bit of that because ever since BFSI has taken a lead in our overall revenue share, because furloughs, a little bit of delay in starting projects in Q3 typically is seen in BFSI, and so much so also in retail and similar industries. So that's beginning to show, but we have caught up and managed to cover up for that by getting some extra work days, by working on holidays and the like. The second factor is people also take leave because the accumulated leave expires by the end of the calendar year, so they catch up on some of that. And we also try to make up through we do some revenue enhancement measures on that. So volumetric growth and some bit of the catch up is what has helped us this quarter. Moreover, in rupee terms, growth, we have got some positive or upside from the way the exchange rate has moved.
Right. Joseph, your utilization improved from 7.6% to 78% actually, from the earlier 76%. Any further headroom you think there is for improvement?
Yeah, what we are targeting to do in terms of utilization is to maybe push this up a little bit more to 80%, because we see the scope for still some scope for improvement based on some analysis that we've done of the people that are available, the opportunities that we have, and we would like to run it at around that level because just given the widespread of skills that we cater to, we want to make sure that we have enough people ready to be deployed on projects at the same time, optimized for profitability.
So with the cash position of nearly 1,500 crores, how do you plan to utilize the cash to fuel your growth going forward?
See, if you look at the real cash and cash equivalents that we have on our book, it is about 1,500 crores. We have got a healthy line of borrowing. We have taken some overdrafts against our fixed deposits, our investments, and we have got some clean credit. But if you net the credits onto our cash position, we are at about a net cash of about 500 crores. So 500 crores is a reasonably good amount to retain as backup, because the IT industry traditionally has always carried that kind of cash levels. So while I'm carrying that, is that good enough to do some huge big ticket acquisitions? I don't think so. Because if you're looking at an acquisition of a company of, let's say, $50 million, like Pure Software, you would end up, having to shell out close to $75 to $80 million. And so that's not the amount of cash that we carry today. So we may have to, look at other capital raise options when such an opportunity comes to us in terms of acquisition. But as of now, the cash position is solid. We continue to add cash. Operationally, we are adding cash of about 170 crores in the 9-month period. We continue to generate cash profits. And like I said earlier, our cash EPS has grown smartly from 20 rupees, 22 to 23 rupees to 24 plus this for annualized basis as we stand. So in all, enough cash to do small acquisitions or decent small acquisitions. But if you have to do some larger acquisitions, we will have to look at capital raise options.
And Joseph, your investments in generative AI business, can you elaborate on the roadmap and expected monetization timeline on this one?
So, our Gen AI business unit, we started the business unit a year and a half back or so, little less maybe. And the way we are looking at it is, I think the market has used 2024 to figure out the use cases and the business value of these use cases, leveraging Gen AI. And so what we did see is a lot of POCs that we did with multiple customers. We've shared that in the past as well in our November readout, that we've done at least 25, 30 POCs for customers, which typically are around 2 to 3 months. And what we are seeing in FY25, early signs of customers moving into more large-scale implementations and production. So as we speak, we have signed 2 SOWs that are year-long in duration and are of larger value. And we expect this trend to continue due to several reasons. One is the overall headwind. I think market conditions have improved. The second one is the leverage and innovation that DeepSeek is bringing to the table. And the third, you also look at the Trump administration has promised $500 billion of investment in AI. And this is on top of companies all understanding that AI is the way to drive innovation, to drive business, and to drive efficiency.
Right. Venkat, acquisitions are helping you clearly diversify across geographies and verticals. But are there any markets or verticals that you're particularly focusing in on?
See, when we look at acquisitions, one of the factors is how nicely it integrates into one of our existing verticals. So if you look at pure software, it nicely dovetailed into BFSI, healthcare, and high tech. RES was largely BFSI and part healthcare. Macmillan was into edutech. So you see all the 3 that we did in the previous year or the current year has nicely dovetailed into our existing verticals. Now, the most recent one, I wouldn't want to call it an acquisition because it's a customer consolidation in the Middle East. We acquired the entire business of GADS in Middle East. That's almost 99% is a BFSI because they have got very good customers in the banking sector in the Middle East, Dubai, Oman, and Saudi, and largely, infra work, infra and application support work that they are doing for the BFSI segment. And it nicely dovetails into our BFSI story. We see options of, cross-selling Artha banking and Artha services into these opportunities. So yes, vertical alignment is a critical, match criteria for us when we look at acquisitions.
Well, the PDA segment continues to contribute nearly 80% of the revenue. Are you planning to diversify revenue streams further? Joseph, the question's for you.
So, what we should start doing now is looking at our revenues more from a vertical standpoint because, last year we had announced that we are getting into a vertical structure. And currently we are not reporting our P&Ls by vertical, which we'll start doing next year. Because effectively now, PDS is 80-82% of the company revenues, and the 6 verticals are what constitute this 82%. But the verticals also can be mapped onto the IMSS business, which is remaining 18%, because GBS is a percent or so, right? So the way to look at it is the focus that we are putting on our verticals, and this is one of the transformational initiatives that we've taken along with creation of the generative AI business unit, and putting together an NN sales team under the chief growth officer, which again is doing well. So vertical structure has taken off really well, bringing a lot of alignment between delivery, sales, and domain, so that they can approach our customers with an integrated business-led offering. And the verticals, as you would see from our investor presentation, the verticals that are doing well is BFSI, healthcare, high tech. EdTech did suffer a little bit, but still is a significant portion of our revenue. And all of our focus in the coming years will be on how to strengthen and beef up these verticals, because they would be the go-to market as well as the P&L centers for the company.
All right, but with this, gentlemen, we'll let you go, and thank you so much for taking the time out and speaking with us on your earnings outlook. But moving on then.